Hey, what's going on, guys? This is Terrence Ray, back at you with another stock market update. And right on cue, as soon as I get ready to come on to do the video or get ready to record, the market turns red. So we got the S now. Let's see, the first 30 minutes of the market, the morning, the market was up, it was green. And now, as I get ready to do the video, we got it turning over. So we got the S&P 500. The futures are down about 10 handles. The NASDAQ futures are down about 30 handles. As you can see, look over here to the left, you see the red over here at the top. The Russell has not is not down as much, so it's going back between green and red. So which leads me to believe that this is just maybe some news came out or something like that. It's right around 10 when you get a reaction to some news. I know Jay Powell is speaking today at 2 o'clock. So all if you're doing any type of day trading today, you need to be aware of that, and be cognizant of it. So let's go straight to why I'm doing this video. I want to talk about the put spread that I put on yesterday in Caterpillar. And the only thing I seen in Caterpillar, I don't even know why I looked at it, right? It's always on my watch list. And so I seen it. I just happened to be, just scrolling going down. And I clicked on, I go through my watch list every day. And when I looked at the bottom, I got this candlestick right here, right? You got a wick on this side, you got a wick over here. I'm gonna take off all the drawings so we can see it. So I had this candlestick, and then you got this big green candlestick. Now this is something that you would call like an engulfing candlestick. It's almost like this is a harami. Generally, you want to see your haramis with this candlestick right here on that side, and then you'll look for a big candlestick after it. But you got the gap down, and then you got an engulfing green candle, right? That engulfed this candle. So when you get something like that, I would have liked to have seen this on November 1st. But then on November 2nd, we got a gap up. So it gapped up, and then we crossed over on the third, our 9 SMA, which just means 9 day simple moving average. And then it pulled back. So once I get something like that, the perfect setup, once we get the crossover or pull back, now we're retesting the gap. So right here, you could say is acting as support. And then at that point, I just go to a smaller time frame. I'm looking at, I come to it right around in here on a smaller time frame. And now I'm starting to look, here's that support level right here. And then you can see today it gapped up. Now I was already in this yesterday. I was just anticipating, what was going to happen today. That don't mean it would, that it always plays out like that, but that was me trying to get ahead and anticipate. And so now what we have a gap up above the 50 SMA. Now I'm on a 30-minute, and you can see a gap up above it on the 30-minute. And then we could see, here we go, look like you got a little bit of a pullback this second 30-minute of the trading session. So that's that. Now we go to the mechanics of it. Now I showed you the technical reason why, right? And then even with that being said, I'm still going to do a high probability trade. Ideally, I want to be in the monthlies. I came out into the monthly of Caterpillar, and you can see you got $10 wide strikes. And what I mean by that, if you don't quite understand, you're not familiar with the option chain, you can see in the middle, got 240, 230, 220, 210, and then we got 250, 260, 270. So the strikes are going up and down by increments of $10. That's a wide spread. And Caterpillar would be an expensive stock. This is a small trading account. So to try and do like anything naked, I don't think I would be able to afford to do it in this account. nor would I try. So when I see something like that, I want to look at a different expiration. I came here and now I got $5 wide strikes, and I'll do something like that here. Now, generally, you don't have a whole lot of shall I say, you don't have a whole lot of volume in here. That's one of the things. However, however, you can the when you look at the option pricing, the bid ask spread is like, between right here is 20 cent, 25, 20 cent, 15 cent. And all I'm looking at is the bid and then the ask and look calculating the difference. And it's not really wide. And I know that as Caterpillar moves and moves like this 29 becomes 22 and becomes 15. Now, if we look at the 8, you can see how look at the thousands of contracts here. That lets me know. And on the TastyTrade platform, it has 3 stars. If you look over here to the right, they're telling you the liquidity of what you're trading. And I generally try to stay in stuff 3 and 4 stars. That way I know that if I get, I'll have no problem getting in and out of these trades. And then from that point, I just sold the 235 and bought the 230. And I'm just looking at basically, I know when I'm wrong on this trade. 235 is this is 234 right here. This is 234 right here. If we look at it on the daily, let's go back to the daily. 235 is right here with this. You can see on the grid, basically right here where support is, and it is below after today, the 9-day SMA. And that's that right here at support. I just sold the put spread. This is a cheap way, or shall I say, not necessarily cheap, but um, a low risk. I don't have a whole lot of risk. I can handle the risk, even in a small account, with doing this trade. And then from this point, if you have a larger account, could you look at something like selling a put? Possibly. It had the IV rank is not there. Doesn't mean you still can't do it. Maybe a covered call, buying the shares, selling the call, or just buying the shares outright, depending on the size of your account. You don't have to buy 100 shares. You can buy whatever you're comfortable with. Just be comfortable with taking the loss too as well. Um, And so I just want to come on and then talk about trade that I put on. I like the trade. If we're just looking at it, Caterpillar's been on his butt the last 3 months. This is a 3-month chart. So we come from this high all the way down to here, no with no real pullback really. And we just got the gap up here and then the pullback here. So let's see what happens. And then, me, I put my drawings on. I got my box. Excuse me. Now that's this box. Basically, I drew this on the 30-minute because right here I got this squeeze indicator. And anytime you got the red dots right here, it's just letting you know, like, hey, they call it a squeeze, the author of this indicator. So, and at that point, when you get something like that, you start look back here. You see how it was consolidating, just showing you consolidation, and then you get a big move out of it. And that's what here I'm hoping to get the same thing. Gap up. Hopefully I get a big move up out of here and it continues upward. Now looking right now, it does look like it may try to fill this gap, which I don't want that, but this is what it is. But the trade, I got 29 days. So I can sit in this trade and then just hold it. I got 29 days. Now at 21 days, next week, next Friday, if I had not hit my take profit, which is 50% of the premium that I collected, which was what I collect 150. I had to look at, let me see. I sold it and collected. Let me go to the position tab 170. And I'm just looking to make about 85 bucks out of it. So if you got anything out of this video, guys, please hit the like button, hit the subscribe button, share the video, and then let me know what you think. Let me know if you like this trade uh, or not, or let me know what you're watching and what you're in right now. And with that, guys, I'm gonna be out. Peace.